So you probably saw it. The crypto market just took a huge nosedive. And if you're wondering what's going on, well, it's way more than just a bad day for traders. We're going to unpack this whole thing because it actually tells us a ton about the entire global economy.
Okay, so why did everything suddenly take a tumble? The short answer? Investors are just getting nervous. But the real story, the one we're digging into, is this wild global economic tug-of-war. It's playing out from Wall Street all the way to Tokyo, and yeah, crypto is stuck right in the middle of it.
All right, first things first. Before we get to why this happened, let's get a clear picture of what exactly went down. Let's take a look at the hard numbers from that Tuesday tumble.
And as you can see here, wow, it was not just a Bitcoin problem. I mean, look at Ether and XRP. They actually saw even steeper drops. This tells us it's a risk-off mood across the entire crypto space. It's like investors everywhere just decided to cash out all at once.
And to put that into perspective, look at this number. $3.02 trillion. The total crypto market cap dropped 3.7%. I mean, that's billions in value just gone. The whole market got pulled down to just over $3 trillion. That's a huge move in a really short amount of time.
Okay, so that's the what, a big market-wide drop. But now for the real question, why? Why right now? Well, it all boils down to investor psychology and some really important economic data that, believe me, everyone is watching.
Basically, investors are getting anxious. After such a great run, a lot of people are just deciding, hey, let's lock in those profits. They're cutting back on things they see as risky. And that risk-off feeling, that's the trigger. It's a collective decision to just play it safe for a bit.
So why the sudden jitters? Well, all eyes, and I mean all eyes, are on these upcoming economic reports from the U.S. We're talking about the jobs report, the inflation numbers. These are going to give us massive clues about how the economy's doing. And the big one, what the Federal Reserve is going to do next with interest rates.
But here's where it gets really interesting. This isn't just a U.S. story. Nope. What we're seeing is this incredible tug-of-war between two of the most powerful central banks in the world, the U.S. Fed and the Bank of Japan.
And this right here, this is the heart of the conflict. See, over in the US, everyone's betting the Fed is going to keep cutting interest rates, right? That makes money cheaper, which is usually great for assets like Bitcoin. But then you look at Japan, and traders are expecting the total opposite, a rate hike. That makes money more expensive and could suck capital right out of risky investments all over the world. They're pulling in opposite directions.
And just to make things even murkier, even the Fed officials in the U.S. can't seem to agree. You've got some saying policy is too tight, others are still worried about inflation. It's all these mixed signals, and it leaves the market completely guessing as it tries to figure out what the heck is going to happen in 2026.
So, you take all this short-term fear, you mix it with this global uncertainty, and what do you get? You get a huge split right down the middle among the experts. It's created two completely different stories for where Bitcoin is headed next. So on one side, you have the cautious crowd. Analysts like Lin Tran, they're looking at Bitcoin's failure to stay above that big $90,000 mark and saying, see, the rally's out of gas. In their view, investors are just trying to protect what they've already made, not chase after new records.
But then, you've got the other side, and they're way more confident. You look at the analysts at Bitfinex, and they're basically saying this little dip is just noise. They see something much bigger happening, a fundamental shift. They think the market isn't being run by quick-buck speculators anymore, but by patient, long-term investors who are playing a totally different game.
And their whole argument is built on some pretty solid points. First, the creation of new Bitcoin has slowed to a crawl, which makes the ones out there even more scarce. Second, these recent dips, they haven't been as deep, which suggests buyers are jumping in way faster. And here's the kicker. Huge demand from those new ETFs is basically swallowing up any new supply that hits the market. All of this points to a market that's, well, growing up, building a stronger foundation, one that could support another run at those all-time highs in 2026.
So what we're left with is this classic battle playing out right in front of us. You've got short-term fear driven by all this economic drama smashing up against a long-term bullish story that's all about Bitcoin's core fundamentals changing. And it leaves everyone asking the same massive question. Is this dip a warning sign that the party's over, or is this the buying opportunity everyone's been waiting for?